Hello, everyone. Welcome to Good Morning Trading. I'm delighted to have you back. Let's take a look at the latest economic news and what's happening in the financial markets. Yesterday, we had the FOMC meeting and the decision from the Fed and Jerome Powell. The interest rates have changed. I already spoiled it for you 48 hours in advance. It was obvious. They seemed a little concerned, but still gave a very cautious speech. A little concerned about the rising prices of oil barrels and gas. Especially now, with Iran having attacked one of the main gas sites in the Middle East. Everything is under control now. There's no more emergency, but it did push up the price of oil barrels. And maybe if the regime feels extremely threatened, it could adopt a so-called kamikaze policy, destroying everything and attacking. In any case, the oil fields and gas fields of its neighbors would be doomed to face exactly the same thing, of course, in retaliation. So over the past 24 hours, we've seen the Iranian regime become much more aggressive. It has lost two major leaders. We see this almost every day, but this time, really, these were the big bosses. They were. We were talking about the top-level leaders here, the ones at the very top who have fallen. Not just the lower ranks, but the top ones. So the big bosses have fallen, and now they're starting to strike out a little bit, here and there. So, in a way, it's a bit reassuring, centrally speaking. Yeah, no, they still said, well, we don't really know what's going to happen. It can't stay like this. For weeks and months at this level, we then had the Bank of Japan follow up. Same message, being cautious about the consequences of the current rise in oil prices. Japan is 100% dependent on this geographic area, the Strait of Hormuz. It's absolutely massive and strategic. The Americans, in quotes, could do without it entirely. But Japan, if the Americans can live self-sufficiently and meet all their energy needs, but Japan, not a drop of oil, not a single gas field, absolutely nothing, 100% dependent. So things are relatively calm. Bank of Canada, same thing. Interest rates are stagnant, and there's concern about the inflationary consequences of rising oil prices. So here we've had a combo, the United States, Canada, and Japan all telling us exactly the same thing. Today, we're going to move on to the European Union, and then we'll have the United Kingdom, which will probably tell us exactly the same thing. And that will cover all the central banks, all telling us the same things. But at least we've taken stock of the situation. The market doesn't really like it, since we're seeing a downward trend. And here, I'm saying be careful. It's going to be much harder to handle, because tensions in the Middle East are rising. We're getting closer to the weekend when there could be missile strikes or bombings. It's the Festival of Light in Iran. Normally, tens of millions of Iranians take to the streets. This holiday is ancient, pre-Islamic. Let me remind you that Iranians are Persians, so Ahura Mazda and all that. My history teacher shouldn't get started on that, or else you'll end up with a whole lesson on Ahura Mazda. There you go, Festival of Light, pushing back the darkness. I'm not even talking about all the political symbolism that could be behind it right now. So yeah, it's gonna be a key moment, and then we'll see if the movement tries to encourage people, if they can, to go out and react anyway. So it could get pretty heated this weekend. If I were you, if you don't have, I was about to say the intelligence, but that's meaningless. If you don't have This is live. I'm searching for the word that's not coming to me. It's not elegance either. It's not intelligence. That's pejorative. If you don't have the age, I'll let you replace that with whatever word you want. That's even better. Then do scalping, day trading, meaning be completely in cash every night. That way, no matter what happens overnight, you won't get hit hard. On the contrary, it becomes an opportunity during tense moments of potential hypervolatility. That's what you should do, in my opinion. And I think that, in the long run, you should always do that as well. Every market anomaly, every market event, all of that becomes a chance for you to position yourself well, and you don't get hit in the face thinking, and that's just not true. Now it's going to take me 2 weeks, a month, 2 months, 6 months to get back to the price. The original price, there you go. Opportunities, opportunities, fluidity. That's it. Let's talk about fluidity. That might be about the word I was looking for. And it's not exactly that. I'm thinking of Pirates of the Caribbean. I'm thinking of sloops. Sloops were those small, light ships with just a few little cannons, but they managed to capture those big, powerful, armed Spanish galleons. Some ships even had some even frigates. They managed to capture them by being much more agile, circling all around, firing with their little cannons. But it would go on for hours, and even 74-gun frigates had to surrender or sink. So never forget fluidity, the ability to move. It's the thing that's most valuable these days. You can also think about this in countries at war. The people who die are the homeowners. They're the ones who stay in their houses. Because they still have 15 or 20 years left to pay, they're more likely to stay in their homes than renters who just leave. And when things blow up, or in Syria, right? The renters ended up in Lebanon within 24 to 48 hours, while many homeowners stayed in their houses for years and died there. Think about that. Fluidity in your work, in your life, in your ability to react. It changes everything, really. All right, I'll stop now because honestly, I'm still thinking about Ramadan and I feel like giving you a whole lesson. But anyway, this is a key moment. So when it comes to your portfolios, I think the prudent solution is to lighten them as much as possible. And then if nothing happens over the weekend, you come back on Monday, you take your positions again. Sure, it'll cost you a bit. Maybe you'll even make some money doing this, just a few commissions, but at least you'll have a peaceful weekend. That's why I'm telling you to be careful. Be careful with the Nasdaq. We're at the low point and we've just broken through 24,600. Our big drop kept going overnight. When you see that, it really doesn't make you want to buy at all. It's better to look at the lows instead. Well, we've got last month's low, and the monthly support isn't all that strong. It would have been better if it had dropped to around 24,125, and we've got the lowest point of the year. Don't be afraid today. It's just that we're down 300 points, about 1%, and now we're back at the year's lows. So my strategy here was really simple. Wait to see if we hit those major support levels and then make some quick little scalps off them. One or two well-placed trades and they should be done without taking any risks. You can really feel there's a heavy pressure here. Just look. All the indexes are in the red, the S&P 500's at its lowest in 15 days and at its lowest in 2 months. It's just a few points away, less than 0.40% from its yearly low. Watch out, the Dow Jones hit its annual low last night, so the Nasdaq might follow suit. We're really in a downward spiral. You can feel it. It's very heavy. And on the European indexes, the market hasn't even opened yet, and we're already down about 2%, 23,069. On the DAX, we're probably going to hit 23,000 and maybe even go down to test the support level. A monthly support level 4? When you start seeing support level 4 on the monthly chart, that's really not good at all. Usually we stay between resistance level 3 when there's a really strong upward wave. Monthly support level 3, when we're in a downward phase, look at the monthly support level 3. It held up beautifully, bounce, every single time. Now, we've broken it. That's not good at all. It's not a good sign for buyers. It's a very good sign for the sellers. So we're definitely not rushing to buy right now. Right now is not the time. And the CAC 40 still hasn't reached it's at its lowest point in the last 2 weeks, but it's almost there. The 7,850 level will try to hold, but it might end up just like the Maginot line. They'll just go right past it, and they might even jump right over it. Be careful, the markets are pessimistic. The central banks haven't reassured anyone at all. Let's look at two more anomalies we have. So in this whole mindset, of course, we have the price of oil going up. There's no need to panic just yet. We're still under $100, so it's not particularly inflationary. That's what the banks, the central banks, have told us. Still, the price of gas has gone up a bit more with the bombings of the gas fields. But overall, when it comes to energy, there's really no panic at all. On the other hand, the anomaly is that there's still an increase in tension in everything. Gold should be going up, but gold is crashing. It's very rare to see this kind of anomaly. So if we start selling everything off, it could be the start of serious tension where investors don't even know anymore. No idea where to go anymore? With the increase in tensions we saw just yesterday, at the very least, gold should have stayed at 5,000 and oil at 4,000. It just bounced back to 4,750 a few minutes ago, so gold is taking a big hit, even though it should normally serve as a safe haven. Not at all, not at all, the same thing. Bitcoin went up to 75,000. You mentioned it, but honestly, I've been saying this since Monday. It's tough to break through. Boom, 75,000, 71,000, 70,000, 1570 right now, also taking a hit. So we're looking at a really tense market. Let's be clear, it's tense, everything's in the red. Energy stocks, which should have soared, are only up a little, and defense stocks are getting crushed. When I got up this morning and saw gold down by more than 2.50, and if we look at all the major stock market indexes across the Asian continent, we're currently seeing a significant drop of 3% over in Tokyo, and specifically the Nikkei is down 3.38% in Tokyo today. Almost down 2% at the open on some European indexes. Red clouds everywhere, 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 even gold. So yeah, things are blowing off steam now. If I may say so, I didn't mean to make that pun. Topic, no notes. Well, there you go. That's what blowing off steam is. Not bad. And watch out, as we get closer to the weekend, I think if things are this red and everything is being hit, so to speak, it's because some people are thinking about letting this famous Festival of Light pass, which usually brings out tens of millions. Iranians out in the streets spontaneously, naturally, with little lanterns and all that. That is to say, even the Iranian government, by bringing in Sebastian DJI and all that, won't be able to stop the Festival of Lights, where everyone will be left traumatized, holed up at home, afraid to go out, scared to getting hit by a stray bullet or a stray missile or something else. But right now, we might be at a tipping point of tension, or at least at risk. I don't know which way it will go, whether it's a risk or an opportunity. It depends on your perspective in the coming hours. So caution is key here, as you can see. When things are like this, my approach is more about observing, spotting the major support levels, and just waiting calmly to see what happens there. If there's a small bounce, I get in, grab a few points on the Nasdaq, and that's it. It makes for a so-called normal day. That's what's really interesting about scalping. It's that some days you see plus 1% or minus 1%, or days with minus 3%, plus 3%, minus 5%, plus 5%. You get the idea. I don't want to keep repeating myself. Sometimes it drags on, like minus 4%, plus 4%, and so on. You can always do it. The same kind of day happens almost all the time, with just a few small variations. The same kind of two outcomes, that's the huge advantage of being versatile, of being flexible and adaptable. You're not afraid of anything. If the markets go down, great. If the markets go up, even better. If the market goes sideways for 20 years, even better. Even better. We're always happy. Actually, that's the difference, unlike swing traders who are basically in a bad mood every other day. With that, take care, all the best, and I'll see you very soon. I'm switching over now. I've got a 10-minute head start for the people in my school. Ciao, everyone.